I've been in crypto for over 6 years at this point, and it's in my opinion that this bull market is not over. But in today's video, I'm going to explain exactly why I believe this is the case. I'll mostly be referring to the Bitcoin chart. We're going to look at a couple of different time frames and go through some analysis there. And then I'll also be sharing exactly what you should be doing right now during this quiet come choppy period. If you enjoyed the video, drop a like, subscribe to the channel. But without wasting any more time, let's take a look at Bitcoin. Okay, so we're going to get started on the weekly time frame, looking at the bigger picture and really zooming out. So I think a lot of people could do with this right now. So we're going to start at the beginning, and we can see that we made a bottom end of 2022, 16K. And from that point, we've pretty much been, in a very strong uptrend, up only, especially during Q1 of this year when things just blew out of control. And you have to ask the question, does this chart look healthy? Now, the last few weeks, looking at this stuff, yeah, it doesn't look great, especially when you drop it to those lower time frames. But when you look at the bigger picture, when you look at the overall chart here, we've looked, you see this movement here. We've pretty much run from 16K all the way to new highs at 74K. And you ask yourself, when we're printing that market structure and we're looking for higher highs and higher lows, especially on these higher time frames, where is the higher low? Now, yeah, you may argue here, but to be honest, this just looks like some consolidation before a next leg up. It's not really much of a higher low. It's just a pause in the trend. And this is what I feel like we're printing here. We're printing a higher low. Now, you may be looking at it thinking, well, anything above, let's say, even for argument's sake, 30K could be considered a higher low, and it could, technically speaking, but it's not exactly bullish to see us nuke 50% from here. If we were that strong and if the bull market was that strong, I really wouldn't expect that. So we'll play out a couple of different scenarios on where I'd be expecting to see this higher low end on lower time frames. We'll get into that in a moment. But one thing I want to make a point of here is, after such a move, we are very, over these last 6 months especially, we're just used to seeing everything going up. You just buy a dip, you get rewarded, and, prices go higher. But that's not the case now. Things have changed, and it is about time that we finally make a higher low. Now, because people are getting a bit anxious and, a bit edgy about it, the question marks, start to rise. People wonder if this bull market is over, but this is completely healthy in my opinion, because as we can see historically, we very rarely break all-time highs on the first attempt. If we've seen some deviation, yeah, but a clean break and continuation on the first attempt, it's very, very strong resistance. At the all-time high, you are going to get resistance, and that is why I think we've seen some deviation, people getting carried away. We've obviously broke above 70K and people think this is it, but it's not always the case, but it's also not a reason to get overly bearish. And when we look at this trend, and this is a great tweet from a friend of mine, Bagsy, he says, we're not early, we're on schedule. And people are probably looking at this chart and thinking, are we early, are we late? And people will argue both sides, but to be honest, I think we're just somewhere in the middle. Because, yeah, the opportunity to buy at the lows at 16K, that's over. And for this cycle, is probably not coming back. And then when it comes to us being late, no, I don't think that this is it. And we've just seen deviation above the highs, and that's it, bull market over. So, we're somewhere in the middle. And I think that is exactly why Bagsy says we're on schedule, because you're not early, you're not late. You've not bought the bottom, but there's still money to be made. And I think that is a great kind of summary of where we are right now. But what we'll do now is move on to the lower time frames, the 12 hours specifically, and have a look at some different scenarios. Okay, so now we're moving on to the 12 hour. And as we can see here, we had that nice easy ride in Q1. Pretty much long anything, you were going to make money. As long as your stops weren't too tight or you were using crazy amounts of leverage, you probably were patient enough and could make money on pretty much anything. But that isn't the case anymore. Easy mode has now left temporarily, and we are looking at this range where it is choppy, it is difficult to trade, and this is why 95% of traders fail. This is not easy mode anymore, and a lot of people have no business trading it and should just basically sit in spot and be patient. But there are a couple of different scenarios here that I'm paying attention to. And first of all, you have to pay attention to the range lows. Now, if this level was to hold, this would be option 1 in the best case scenario, because it would mean, the least amount of pain for bag holders, spot holders, and we could see range lows hold. And as soon as we get back above this level here at around 67.5k, that is the first reclaim. It is on a lower time frame, but it is when that structure on lower time frames starts to shape up, starts to look better, and that will of course feed into them higher time frames. We have to start somewhere for the bigger picture to start looking good again. So that would be the best case scenario for a lot of people, like I said, the least amount of pain. But option 2 would be that we look at these wick lows here, so around 59k, because it could be that we see deviation below range lows. We wipe out the wicks. Anybody who's got stop losses below the wicks thinking that they're safe, running it to like mid 50s, they would be wicked out, and then what I've just said would play out after that kind of event. Now, most people have no business knife catching here, it'd be very difficult. I think a lot of people would be more conservative. If we reclaim them range lows here, that would make a lot more sense and would give people more confidence to buy again. Yeah, they've missed the bottom, but the chart will be looking a lot better at that point. And then the last scenario would be the bulls' worst case scenario, to be completely honest, where if we do lose that, it isn't actually deviation. It becomes a retest, a bearish retest of the level as resistance before heading lower. And the immediate level to pay attention to for me would be here at this cluster of price action at around 51.5 to 52k. Now, like we said, at that point, the bigger picture on the weekly, it would still be a higher low and things would look fine, but it is going to be frustrating for people in the short term. Of course, the chart will look dog shit in the short term, in the midterm, probably a bad summer ahead, and people are going to have to be patient. But as long as we print that higher low, I really want that level to hold, because if we lose that structure just gets worse and worse, and bulls lose confidence and things start to escalate. But I do think that for me, if this bull market is to continue, is a somewhat worst case scenario, looking at low 50s. So like I said, most people have no business trading this choppy price action, and it's all about capital preservation now. You don't want to lose your money before the easy times return. So what can you actually do with your time now to be most effective and wait patiently for easy mode to come back? And I'm going to go through 2 tweets now, one from me, one from CryptoDog, just addressing this kind of situation. So my tweet here is all about 3 options that you can go away and do whilst waiting for easy mode. So option 1 is go and touch grass. Actually go and have some time out, go and recharge. Q1 was very busy. A lot of people are probably drained mentally, physically. And if you're in a decent position right now, if you have a decent sized portfolio, if you're done deploying capital and you're just patiently in a waiting game right now, this is probably best for you, because it gives you the time to recharge, go and enjoy the summer if you actually have decent weather, unlike me, during the summer. And then you'll come back later in the year ready to run it back. Option 2 is put the work in. So you may want to just keep building your knowledge, build your network, utilize airdrops that are actually worthwhile to put yourself in the best possible position before things pick back up. So this is for people maybe with smaller portfolios, not too much capital, making use of the airdrop test nets, as we mentioned time and time again on the channel, to put yourself in a position where your portfolio is bigger to actually benefit when it starts to run it back. When we see new all-time highs across the board, you've got a bigger stack that will run with that. And then lastly, it's around getting the overtime in. So yeah, you may not have any capital to deploy right now, maybe you're all out of stables, but you could actually put this time towards working your day job, working overtime, building up more capital than what you used to then deploy even more to the market. Now, of course, everyone's situation is different. Not everybody's in the position to do this or want to do that, but it is just an option for those who want to get as much capital in now before things pick back up. And this tweet from CryptoDog, I actually seen it this morning and decided to include it in the video because I think it sums it up extremely well. So if you've been sidelined, he believes this is a good opportunity to scale into high conviction tokens. So like I said, if you have that capital available, now would be a good time to start scaling into positions and really doubling down before things pick back up. But if you are fully invested, just survive, hold on to them spot positions and do not capitulate. So this is what I mean about going touching grass. You know, you've done everything you can, you've got your money in the market, it's time to just take some time out, recharge the batteries, forget you even own them tokens, don't look at the charts, and come back when things are looking better. Someone once said liquidations are a forced transfer of wealth from traders who need leverage to wealthy spot buyers. And like I said, you know, with the liquidation events that we've seen recently, when World War III was breaking out a couple of weeks ago, we've seen an altcoin liquidation event of around 700, 800 million, one of the biggest we've ever seen. And that is all because people want to make money quick. They get impatient. They want to see bigger gains in a shorter amount of time, and they see leverage as a way of doing this. Whereas those who are in spot, just, you know, they're riding the dip up and down, and eventually in the long term, they're going to reap the rewards of that. I mean, he was enjoying a retirement from social media, but he didn't want to see his brothers get shaken out. And I appreciate the tweet from Dog here, because I think it just sums up perfectly what a lot of people needed to hear right now. So that is all for today's video. Hopefully you enjoyed it. Hopefully it was useful. If you did, drop a like, subscribe, comment, and let me know what you think is coming next for the market. I mean, in my opinion right now, if you are an investor, if you are here for the long term, you shouldn't be too concerned. I know when you're scrolling Twitter, it's very easy to, you know, see all the doom and get really worried about what the future holds for crypto. But at the end of the day, you know, like I said, with Bags' tweet, we're on schedule. We had to see a pullback at some point. It's not nice. You know, you start to see that net worth, that portfolio drop, but it's part of the game. If it was up only forever and easy mode forever, everyone would be millionaires, and that isn't the case. So, like I said, if you enjoyed it, drop a like. But in the meantime, please do trade safe, invest safe, and I'll catch you in the next one.